This is the BankBeat Community Banking Podcast, and I'm Jackie Hilgert, Editor-in-Chief. BankBeat is the online source for community banking news and opinion. It is published by the same company that has, since 1992, published Northwestern Financial Review magazine. Today, I'm at the Bank Holding Company Association's 2018 Spring Seminar, which offered a high-performance banking panel that featured 3 successful bankers who shared their insights into what it takes to innovate in today's environment. One of those bankers, Kevin Forristall, joins us today. Kevin is Chief Strategy Officer and CIO of TS Banking Group based in Treynor, Iowa. The holding company is officially Treynor Bankshares, with combined assets of about $891 million. The company operates 3 subsidiary banks, Treynor State Bank in Treynor, Iowa, the Bank of Tioga in North Dakota, and First National Bank and Trust in DeWitt, Illinois. Makes for an interesting footprint. Kevin, when I look at the numbers for your organization, they indicate you have an infrastructure suited to a much larger organization. What's the strategy there, and are you preparing for growth?
Sure. That was something that had really emerged over the course between 2008 and 2014, I would say. We operate in a very data-driven manner as an organization. One thing I'd mentioned on the panel is that we really approach our balance sheet as an organization with a Moneyball approach and really looking at what are the best risk-reward propositions we could be looking at a bank. And that's really forced us to have a lot of an analytics environment. And for a long time, a lot of people might think that risk management is an expense. When we looked at investments that we could be approaching and the risk management that we needed to do to be able to justify these investments, we all of a sudden noticed it's not just a risk management expense, it's actually an investment because we can unlock a lot more upside into what we pursue. But still, it became true that we had a very large overhead expense for the size of the organization. And in fact, we had a lot of outside participants, even regulators, saying, you're built for an organization 10 to 20 times the size you are. And we really believe in just being great at what we do. And a lot of areas of our organization that people might typically say is an expense, we really say, if we really become the best at that, can it become an investment, whether that's marketing or HR or IT. But again, that obviously comes with an expense. So in 2014, we went down the path of starting acquisitions. And so we acquired 4 banks in a 2.5-year period of time. Even since I've started in 2008, we went from about 100 million in assets to just about 900 million in assets. And I would say through all that growth, we're in a season of pause right now where we're focusing on, okay, with all of this growth, what are the areas that we need to go in and address to become great at? But then we will be resuming the growth and look to, again, acquire banks in 2019 and beyond.
Great. You've got something of a dual strategy, it seems, grow by acquisition, and then also making money through sophisticated management of your investment portfolio. Can you talk a little bit about the latter?
Sure. I would say one unique thing about our organization is our CEO. He grew up in farming. His dad owned the bank, but he never has really considered himself a banker. So he didn't rise to the top through, making loans and things like that. He's a very analytical person and grew up more on the capital market side. And one thing that we say we are is asset agnostic, which means we're indifferent as to, if something's a loan or an investment. An investment, what we invest in are bonds, and bonds are loans at the end of the day. So there's a lot of fundamental characteristics that's shared with the investments that we go into versus the loans. But a lot of times people treat them so differently, or there's a lot of biases involved. And I'll just use one example in municipal bonds. In 2012, a lot of people, they had a lot of concerns about the state of California and its budget problems. And one sector of investments that we like are school district investments. So the repayment on those school district bonds really has nothing to do with the overall state budget, and it really has to do with the individual cities and the enrollment rates. And really, for those to be a problem, a town would have to become a ghost town, and everybody would have to move out. But one thing that we found is we would buy a bond in very northern California and compare it to a bond in very southern Oregon, And the bond in California you'd get 1.5% more for, just because it had the name California on it. So there's a lot of bias in the label of investments. And so there are times where we look at something that might have headline concern, and we do a fundamental analysis, very numbers-driven approach to really understanding the risk and the return of that investment independent of what its name is. And so we've found a lot of opportunities going down that path, and definitely, again, what we might see as a risk management expense is actually a big investment when we can begin unlocking opportunities like that. And we've even had, examiners tell us, if this school district here in California, if I hadn't saw the name on it, I wouldn't have been able to know if it's any different than a school district in Iowa. So anyways, that's kind of some description on that strategy. Very interesting.
And one thing that you mentioned in the panel is that your company gives 10% of its pre-tax profits to the community. That's a huge commitment. So you tell me, what's that rooted in, and what does the organization gain from that?
Sure. One story about the organization. So again, it's a family-owned bank. And in the early 2000s, we were very, very small at that point in time, just primarily based out of Treynor, Iowa. And, ownership, they're a very long-term minded approach. And they thought, we either need to substantially grow this organization or we need to get out of the organization. And for them, there's no question. They were in it. They're committed for sure. And so in order to grow, we started expanding into a new market. And we were small enough where that expansion drew earnings negative for about 26 months. And it was intentional and it was planned, but that was part of it. So anyways, towards the end of that expansion in 2007, the family that owns the bank, they all sat down at a local cafe and said, when we start making money again, we need to have a plan for how much we're going to put back into the community. So they each got a napkin and they each wrote a number on that napkin, and then they said, go. And they turned over the napkins, and each one of the three had written 10%. So it was just a unanimous blind vote. But I would say, as far as that, wasn't just coincidence. For them, it's grounded in principles of faith, and it's been great to see that live out in our organization. And what that's looked like in our community is there's been a lot of commitment to financial literacy. So we've actually been involved statewide and throughout the state of Iowa to get financial literacy curriculum integrated K through 12 in our schools. And so we've been partnering with a lot of school districts to integrate financial literacy into other classes. And there's a lot of other community reinvestment that we do that's typical to other banks. And I would say beyond the financial metric, we have a really high volunteerism rate throughout our employee base, whether it's the frontline employee to one of the top executives. We're all plugging in some way, shape, or form.
Great. And I bet it also factors into the liquidity challenge. You've got support of the community going on, and they're supporting you in return.
Yeah, absolutely. It's great because we love our communities, and they love to have somebody that's active, plugging into communities. And so it's been a great endeavor so far.
Awesome. Thanks, Kevin. Appreciate your visiting with us.
Thanks for having me.
This has been the BankBeat Community Banking Podcast. Our sponsor for this edition is the Bank Holding Company Association. Information on the Bank Holding Company Association or a list of its upcoming events, go online to www.thebhca.org. I'm Jackie Hilgert, Editor-in-Chief of BankBeat. Thanks for listening.